homeowners is the anticipated interest rate hike in the coming weeks. Property experts forecast a 25 or 50 basis point hike that could push the prime lending rate to over 12%. To shed more light on this, we're joined by Dr. Elna Moolman, who is the head of South African Economic Research at Standard Bank. And Dr. Moolman, always a pleasure to have you. Good morning to you. Not good news indeed. I mean, we're already under strain. We're seeing consumer spending not only dwindling, including disposable income as well. So we're anticipating a further price hike or interest rate hike. How is this going to impact on the bottom line?
Good morning. Absolutely. We expect another 25 or quarter percentage point increase in interest rates, and it will hurt consumers. We've, of course, started at a repo rate of just 3.5% at the bottom of this cycle. And with this extra quarter percent, we'll be at 8.5%. So it is a significant increase, and it has happened fairly quickly. So there's clearly pressure on consumers, particularly after this interest rate hike.
Yeah, and the external factors, of course, that also contribute to the how the Reserve Bank, moves in terms of interest rate hikes has to do with what's happening in Asia and also in the European markets as well. Our situation is not necessarily unique, is it?
Absolutely. So we have seen significant interest rate hikes across the globe, and we're getting close to the end of that. And I'd say there are a couple of factors that could potentially become a little bit more constructive from a consumer perspective. In other words, in the short term, yes, we'll have a further interest rate hike, and it is negative. But the positive is that we're seeing inflation coming down, and we're specifically seeing food inflation coming down, which is, of course, one of the non-discretionary parts of the consumer inflation basket. So if this continues as we expect, then towards next year, we think that the Reserve Bank can start to cut interest rates. And that's what we very often see, is that we have these very short interest rate peaks. So it shouldn't last then more than the rest of the year. And from next year onwards, there can be a little bit of relief from the interest rate side. And then, as I've said, inflation and food inflation in particular being much lower then as well.
Yeah, and also if we look at macroeconomics 101, that these are instruments that are in place, one, not only to safeguard the currency, but also to keep inflation within the set target of up to 6%. And I know it's been a bit of a strain, Prof, or Doctor rather. So just educate us briefly, why do we have to have inflation, interest rates, and also repo rate, all of those as well?
Yes, unfortunately, like you said, the inflation problem is partly a global problem. So we've imported some of this. We've seen some currency weakness that's also giving us some inflation pressures. Some of the pressure is just coming from higher agricultural commodity prices. And the Reserve Bank's task is then to say, we would like to contain these inflation pressures. In other words, we'd like to make sure that it stays there, because the biggest problem would be if this becomes a spiral. If we say we have higher food inflation, therefore we need even higher wage increases, and then the next company puts up prices and it becomes a spiral. So what the Reserve Bank does is it hikes interest rates, which makes it harder for companies to continue to pass on prices because demand is then under pressure. And so then it at least stops or prevents this cycle from happening. And we are seeing that that is effective. So we've already seen the peak in inflation last year at close to 8%. And in the next inflation print, which we'll get next week, we expect inflation to decline to 5.5%. So we are seeing that happening. We haven't seen this spiral, and therefore towards the beginning of next year, we think that the Reserve Bank can then start to provide a little bit of relief for consumers.
All right, so let's look at homeowners in particular who may have had their property for over a decade, etc. The inflation has fluctuated over the years so much that the value, or rather their repayments, have probably doubled. What do you do now if there's another anticipated 25 to 50 basis point in interest rate hike? Do you sell? Do you adjust? Do you downscale?
It is a problem, and it depends very much on your individual situation. Can you live through this? And I think the key takeaway, as I've said before, is that we don't expect this to last very long or go much higher. And while we've seen a significant increase in interest rate hikes over the last 2 years, rate at these high levels, we think that there will be some relief and lower interest rates later down the line.
Yeah, and I think caution also to all consumers is the fact that if you do have access to credit or you qualify and you're eligible for a home loan, you've got a good credit score, is not to max out what you are able to lend, Dr. Moolman, in the sense that, live beneath your means, as they say, tighten the belt, austerity measures, cut the fat, and all of those other cliches.
Absolutely. And like I've referred to a little bit earlier, we do see inflation generally coming down. So that should provide a little bit of relief. And we're particularly hopeful that food inflation will be a lot lower. So that should then also provide a little bit of relief from a consumer perspective. But it is always important to keep that little bit of a buffer. We are unfortunately starting to see arrears rising a little bit. Not dramatic at this stage, but we are seeing, particularly for the low and low middle income groups, that people are starting to fall behind somewhat, etc. And that will probably still worsen into the second half of the year. But should we then get that relief that I expect next year, then of course it should limit the pressure on consumers and limit the extent of further financial deterioration that we see.
All right, we're going to leave it there. Thank you so much. That's Dr. Elna Moolman joining us this morning. She's the head of the South African Economic Research at Standard Bank. Just warning consumers, especially homeowners, that interest rate hikes are imminent, and this is probably a 25 or 50 basis points that we're likely to hear from the Reserve Bank's announcement. But